Is 20% down payment a must?
It is not. This is an excellent question, and something that I'm surprised a lot of people don't know. In Canada, there are two types of mortgages that we work with. One side is called insured mortgages. The others is called conventional mortgages. What's the difference? Insured mortgages, anytime a client puts down less than 20% for down payment. Okay. Conventional is the other side, where the down payment is 20% or more. What's the catch? What's the pros and cons for both? So for insured mortgages, it can be as low as 5% down payment if the property price is $500,000 or lower, right? Beyond $500,000 purchase price, it's 10% for down payment. So 5% on the first $500,000. Beyond that, 10% down payment, right? And there's a couple guidelines or rules that you must follow. Insured mortgages is more strict and there's more guidelines. So for example, it must be owner occupied, so no rentals allowed. It can now be amortized up to 30 years for first-time home buyers or those who are buying new builds. Okay, so this is a new change to you can check out one of my videos about that too. And you can purchase up to $1.5 million now for insured mortgages. So that sounds great, right? Less down payment, you can stretch it 30 years, you can buy up to 1.5 million. Yeah, I'm gonna live it in myself, so it's owner occupied. So what's the catch? What's the problem there? There's no problem, except that you do have to pay for mortgage insurance. And it is a little bit extra cost on top. So how much is it going to be? It's going to range from 3 to 4.2% of the purchase price. And the good news though, it's going to be rolled into the mortgage. So you can take your time, pay that off as time goes. You don't have to front that money because that is a lot of money, right? So the bad thing is that though you are paying a little bit more interest over time. You're putting less down payment in there, so you're borrowing more. So overall, the interest you're going to be paying is a bit more, right? So that's the kind of the bad. Well, another thing that's good though, and this kind of balances the situation between the two, is that you get cheaper rates. Lately and in general, you're getting 0.3% cheaper rates than the conventional side, depending on the lender, of course, right? And you will continue to get the lower preferential rates for the duration of your home's mortgage. So let's say you get an insured mortgage deal, 3-year fixed. After 3 years, you renew. Even if you change lenders, you're always going to get an insured deal. So you're always going to get a cheaper deal. So yes, you may be paying $15,000, $16,000 for the mortgage insurance, but you're saving for the duration, the 30-year of your duration of your mortgage. You're always going to get a cheaper rate. So the money kind of comes back to you. Well, what about the other side, the conventional, which is more the normal, what we see, more conventional and more usual, 20% down or more, but it has greater flexibility in almost everything. In terms of the purpose of the purchase, it can be owner occupied, it can be a rental, it can be a mix of both. You buy a detached home, you rent out the basement suite, that's doable. That has to be conventional. The lending amount for conventional can also be stretched a little bit further, especially with big banks. So whereas the insured, they're very strict with the debt servicing and income to debt ratio is very, very tight. There's no stretching, there's no negotiation. For conventional, there's always room for negotiation. So for those who are looking for extra lending amount, the conventional and 20% down is the way to go. And with 20% down, it also gives you more choices for lenders, right? For example, like B lenders, they all start at 20% minimum starting. They don't go below that. You pay less interest over time because you're putting more down payment from the get-go. And because of that, your monthly payments are a little bit lower versus the insured mortgages. So there are some basic differences. For further information, for a more detailed answer, contact us anytime. We're happy to answer.
Yeah. Thank you.